Welcome to Around the Blockchain. Don't forget to like and subscribe. All right, Jeff, welcome to Around the Blockchain. If you can just give the viewers a brief introduction as to who you are and what you do in the crypto space.
Hey, hi, my name's Jeff, and I'm the CEO of Managing Director of Monochrome Asset Management, and I'm a huge passionate advocate of digital assets.
Yeah, most definitely. And look, you've been in the space quite a while. Can you go and sort of talk a little bit about your history in the Bitcoin sort of cryptocurrency space and how you got started
Sure,
in crypto?
I would love to. So my first introduction to the concept of crypto was during the secret financial crisis that was in the late 2012, but it manifested in early 2013 when the government sort of, came down with the legislation to confiscate people's savings, and whatever that's left over was devalued to, essentially nothing. So that gives me the first kick in the guts of the money that we thought we knew was really need for a change, right? And that was really when I started to deep dive in the rabbit hole. It took me about 2 years to understand and actually put money into it. It's just I'm a person that wants to really understand what I'm getting into, the good, bad, and ugly before I actually commit to something in this way. So that, in actual sense, is that the government controlling and freezing of fiat funds really highlighted the role of a decentralized currency that can potentially play a part in society. And this is true in the invention of Bitcoin. So from there on, I did my research. I've over time created my own personal thesis around the growth of digital assets like Bitcoin and the role it plays in certain aspects of society and overall how it sort of benefits humanity. So somewhere around 2015, once I understood the technology and the asset, I was compelled to really bring this thing mainstream. So I started off putting some big chunks of my savings into Bitcoin back then. Back then, I was still choosing for a university and going through that process. And that I would actually, when kind of involved into that, in the sense I started with buying, I started with holding, started a little bit trading, but in about since 2017 onwards, my focus was to facilitate Australia's adoption of digital assets. So I took various roles since then to achieve to where I am today. So, for example, I work as a chief product officer in Travel by Bit, a Queensland government-funded digital asset travel company back then, which has merged with a global travel platform, Travala, today. And I've also, worked on Invest by Bit, which is a OTC provider, over the counter for institutions and private buyers that want to buy Bitcoin. And soon we launched Binance Lite, and then more recently Binance Australia, and right now Monochrome.
Yeah, wow. I didn't realize how diverse your background in the industry was. I knew you got started quite early, but I didn't realize you'd worked on a whole bunch of those sort of projects. Travala is quite a big one. Obviously, I knew you were previously with Binance. How was what was your role at Binance? And I guess, how was that experience?
Yeah, it's a good question. So when we was running Invest by Bit, Binance came on board as a strategic investor to leverage our regulatory expertise and execution ability to launch something to market in Australia. So back then, there wasn't any low-cost trading platform for Australians to really participate in large scale. There were really good long-standing plays in the market, but they just weren't that market that addresses the need for a scalable and low-cost trading engine that is, of a global standard. So it took us about 3 years launching different versions of the product and refine it, and working with regulators, working closely with industry peers, and also service provider partners to finally launch Binance Australia to the market in mid of 2020. So it was never an easy thing to start from anything actually from scratch, but it made all more special when we have secured Binance Australia spot as the largest, most liquid digital asset exchange, just roughly about 6 to 8 months into operation, and we're still the largest exchange today. And looking back, it is an incredible experience working with the team to grow the exchange and to launch and grow the exchange. but also achieving the goal of facilitating the adoption of digital assets in Australia, at least on the retail front. And Monochrome today, it's having that same goal and outcome by focusing on the institutional side of things.
Yeah, wow. Yeah, that obviously would have been a fantastic role, you know, working for Binance, especially the Australian division. Binance is obviously a massive exchange, like you've just said. It's the largest exchange in the world to date, and I think it's had a very, very interesting, you know, history. Obviously, CZ from Binance is you know, quite a well-known person in the industry as well. So it's got some good leadership and stuff there, and obviously you had some good experiences there. So you've moved from Binance Australia, and you're now working for Monochrome. So would you mind just explaining a little bit about what Monochrome is, and I guess what your role is there as well?
Sure, I'm happy to answer that. So Monochrome offers medium to long-term digital asset exposure to wholesale investors, meaning institutions, family offices, company treasury, ultra-high net worth individuals, and even superannuation funds. So we offer it through a secure, regulated, and familiar investment vehicle in the form of a unit trust. So it's a passive fund. So we provide secure and easy access, wholesale access to Bitcoin, so that institutional investors need no longer be concerned about the administrative, security, and risk burdens involved in investing in Bitcoin traditionally. Monochrome has established itself to fill a significant gap in the Australian wholesale market, so enabling wholesale and institutional investors that exposure to digital assets like Bitcoin without the compliance and security risks associated with engaging with new technology, especially dealing with blockchain wallets and custody. I personally, my involvement in Monochrome, so I founded Monochrome Asset Management after feeling a strong industry push for a product that probably caters to institutions. My prior experience was launching and leading Australia's largest and most liquid digital asset exchange as its CEO. So naturally, I had to sort of rebuild and assemble a new team who currently have decades of experience in traditional financial markets, funds management, and so on and so forth. The team currently consists of guys like ex-hedge fund managers, and also various talents from top banks in Australia and abroad. My role today in Monochrome is to provide that strategic direction and decision making with the focus of growing the business in a sustainable way. And at the core, my job is to facilitate the institutional adoption of digital assets in Australia, which is my personal mission to do so. So it's definitely a very fulfilling role.
Yeah, absolutely. And look, just a sort of side question off of that as well, Jeff. Have you guys had much traction with Monochrome? I know it's very, very early days for you guys, but have you had much client interest, I should say?
Yes, so definitely. So this whole initiative was launched because of the constant the door knocking, that the demand of this coming through. And then even though we are such a young fund, we are already talking to a lot of players that are very respected and very well established in the traditional financial space. And that's a good sign that the demand is actually here and is here to stay. Versus say maybe a couple of years ago in 2017, there was this whole talk about institutional adoption, but it didn't really came through because that was mainly still a retail phenomenon. Crypto was still a retail phenomenon, but something changed in March of 2020 when post-COVID reaction of governments around the world, including the US, has accelerated their rate of monetary expansion in a way that it spooked institutional investors like Michael Saylor from MicroStrategy to really consider an alternative sort of protection for their fiat treasuries. So Bitcoin became a real topic, solving a real problem for this institution with large fiat exposures, which are also in a phase of chasing yields that really can't keep up or no longer can keep up as what is it before, because of the rate of monetary expansion has tripled over the past 12 months. So that essentially is a problem that you see that is answering to the markets like North America, for example, in Canada and US. That explosion of demand is happening and it's real. And we're seeing the same thing coming through in Australia. So I think this is the right time, the right place, and we have the right team and strategy to execute something like this. I'm really hopeful for what's to come in the next 6 to 12 months in Australia.
Yeah, absolutely. Look, what do you think your main hurdles have been at Monochrome so far? I've heard a lot of, well, I've actually spoken to a lot of people who run exchanges, not so much the wholesale investor side of things, more towards the retail, and they've all sort of said that like the regulation here in Australia and internationally as well, for that matter, sort of needs to be put in place a bit more. I think they're all sort of calling for more regulation, and they want to be regulated, and they're finding it hard to get some kind of legal framework in place. Has that also been a bit of a hurdle for you guys at Monochrome as well?
No, actually, we enjoy that process a lot because speaking about the experience of leading a retail exchange, and obviously there's a lot of regulation that I personally think that could be engaged more better. And obviously that's a bigger conversation that we're having across industry peers and also with regulators in Australia. And that's not the point of the call today, because that's a whole big topic of itself. So we can have another session on that one. And for an institutional product like Monochrome, right? The good thing of that is that we operate under really clear and robust regulatory frameworks that are already there. Bitcoin is just like another asset class. That's the frameworks are already there. It really doesn't really matter what that asset class is, as long as you play within the rules and regulation, offering that product to institutions in a way that they are familiar with, and it's all comfortable with regulators and also the clients. That really answers the problem that we have today, which is the blocker between demand and supply, but there's a wall in between for at least institutions to come on board. So our job here is to bridge that gap and bring down that wall in the middle.
Yeah, awesome. So look, obviously, what are you hoping to achieve with Monochrome then, Jeff?
So like when I set my goals for Binance Australia, it's always to be the top player in the space, because when I do something, I really want to make it really worthwhile for not just for the team, but also for the space in a whole. So if you look at I wouldn't say that I'm a big player in the growth of the adoption of digital assets in Australia, but I would like to think that I played a part in such a significant chapter in that story, at least on the retail level in Binance Australia. So now in Monochrome, I'm just doing my part to look towards that same amount of contribution to that industry, with the focus of institutional and wholesale investment. And and it's not that difficult, because if you look at analysts from JP Morgan, for example, and also some research out there, the data has shown that a 1% allocation to digital assets like Bitcoin, what can it do to a portfolio? And that's the reason why we're seeing a huge amount of increase of demand from corporate sort of treasuries and investors and wholesale investors to want to get a part, a small this digital asset for this reason, on top of really what's happening in the US and in terms of the the devaluation and debasement of currency happening abroad, and a little bit of onshore at home. So until now, it has been really difficult, like I mentioned, for companies in Australia to find that exposure. But we are here to solve that problem through a regulated, secure, and compliant and compatible investment vehicle for wholesale investors here.
Yeah, awesome. And look, so going back, or just backtracking a little bit, while you're at Binance, obviously your target market was mostly sort of retail investors, and now with Monochrome, obviously you've moved across to targeting wholesale investors, so institutions and sort of high net worth individuals, that sort of thing. What sort of main differences would you say would be between the two, apart from obviously the obvious, right? So the obvious retail investor typically has a lot less money to invest. But I guess what are the main sort of differences between the mindsets, I guess, that you've noticed between a retail investor versus someone who's in the wholesale investor market?
Yeah, so the biggest difference would be the mentality of a typical investor. So in retail, it's a lot about, you hear about the word FOMO, which is stands for fear of missing out. And that's really what drives a lot of this retail craze into this asset and different kinds of crypto out there. But when the institutions look at the asset class, they actually look at it in a very objective manner on the value proposition, the risk, the benefit, and all this kind of research really takes time. And once I would say that in short that retail comes in quicker, but they are less likely to be sticky when things shift from one sort of phenomenon to the other. But when institutions come on board, they tend to sort of take longer, but the money that it comes in will be more. So I believe that's actually a great step forward for the digital asset industry as a whole, because if you look at the retail sector or retail demand and volume in that space compared to the amount of capital out there seeking for refuge or seeking for an alternative investment basket that are all really at the wholesale level, we're talking about moving this industry forward from a $2 trillion market to potentially hundreds of trillion-dollar market in size. So I'm really looking forward to that.
Yeah, awesome. And look, obviously back in 2017, Bitcoin itself had a nice little sort of bull run happening. And then obviously that sort of dropped off for a little while. And now, like you've said as well, so probably starting post-COVID last year, 2020, another sort of bull run has started. And we've obviously seen Bitcoin and various other cryptocurrencies achieve new all-time highs. What would you say the main difference is between back in 2017 versus obviously today's sort of bull run?
So in 2017 is a retail-driven story in at least in crypto, and there wasn't really big involvement in terms of looking at this thing as an asset class, at least from an institutional perspective. There were a lot of talks in, let's say, enterprise blockchain or use cases of blockchain from the enterprise side, but never really in that level of participation as we have to start looking at this as a asset class that we would have in an alternative basket on our portfolio somewhere. So I think that the trends in the US, the companies in the US like MicroStrategy, Tesla, and also payment companies like PayPal, Visa, Square are all really pushing that narrative that look, this isn't really a experiment anymore. This is something, once Bitcoin hit $1 trillion market, it's a different kind of beast, and corporates and institutions would start to take this thing more seriously. So, and this is not just talk. If you look at the number of corporate Bitcoin held in corporate treasuries over the total supply of circulating Bitcoin, it actually rose from somewhere around 4% in 2017 to about 7.6 or 7.7% today. So that's actually a big increase in terms of the allocation and the interest. So I would say that if you look at the stats, you can clearly tell this time there's more institutional participation at a larger scale, and it's more walk than talk than before.
Yeah, absolutely. I would totally agree with that as well. I think that a lot of people I've spoken to, and the narrative as well this time around is, this bull run is definitely different, at least in terms of what sort of I guess helping drive the current price action through Bitcoin. Obviously, institutions have jumped on board, like you mentioned previously as well. We've seen Tesla, we've seen MicroStrategy, quite a few big players jump in now, which is obviously a really, really good sign. And people are starting to look at Bitcoin more seriously, like you've just said, more in terms of an asset, I guess, which is obviously really, really positive for the space. Look, as I guess a wholesale investor, what's the sort of process you take your clients through to obviously gain exposure to obviously Bitcoin and other various crypto assets? Do you guys deal with multiple crypto assets, or is it mostly just Bitcoin?
So we currently focus on only Bitcoin, just because that our value proposition has simplicity of access into digital assets. And I know that there's a lot of digital assets out there that are doing different sort of bringing different values and playing different spaces. But we think that Bitcoin being the longest player and also the largest in market cap has its sort of merits and strength and resilience over time to prove that it's something that it's a category leader ultimately, and proves that it has its place in a portfolio if you're looking into digital assets as a first. And obviously, we want to make sure that we don't overload investors with so much information at an early stage, and really think that it's it might be even counterintuitive. So that's the reason why we're only focusing on Bitcoin at this stage.
Yeah, I think that's a very smart move as well. I get, I'm sure this happens to you as well, but my friendship group on most social media platforms, so Instagram and Facebook predominantly, I just get bombarded with messages on what I think about, this coin or this token or whatever. I'm sure the same thing happens to you. So I think a really smart strategy is to just keep it as simple as possible. And I think you're 100% right. You're on the money with that being Bitcoin, right? Bitcoin's obviously, the most predominant cryptocurrency out there. And just keeping clients' exposure as simple as that is definitely, I think, quite beneficial. Obviously recently as well, we've had Elon Musk sort of talk about Bitcoin's energy usage. And I saw you post a really, really good article on LinkedIn about Bitcoin's proof of work mining mechanism, and that energy cost that's involved with that entire process. Would you mind sort of explaining two things, I guess? So what proof of work is and how it works, and then I guess how energy efficient Bitcoin is as well.
Sure. Since you mentioned Elon Musk, I'd like to touch a little bit on that one. So as demonstrated by Elon's tweet over the past few weeks, so it's very clear that he's not an expert in crypto, but it's okay, right? Imagine taking advice on ways to improve the mileage on EVs or build rockets from a digital asset fund manager. I wouldn't be able to give you that advice, so probably want to listen to me on that front. But much of the criticisms that Elon has laid out, they are valid, but they have been thoroughly debated and debunked, some as early as 2010. Like, all it takes is really to Google and you will find articles from years way back to explain why certain way was done, certain things are done certain way. And actually that's something that I really want to champion, is that education on Bitcoin, because most people have heard about Bitcoin, but most people don't really understand how it works and really why the reason certain aspects are designed a certain way, right? Bitcoin is designed for resilience over application utility and application efficiency on its base layer. So if you actually look at the scaling methodology of the internet, the transmission communication protocol, in the early days, it was the architecture that they picked was a layered architecture. So I wouldn't think that Bitcoin would be using something else different than that. And scaling in layers versus scaling on a base layer offers two main benefits. So one benefit is that in scaling in layers, you can actually segregate the risk of if there's a bug in a layer somewhere, the liability doesn't commingle. So you have that secure base layer to really power everything else. And also the second thing is that you can scale magnitudes faster and exponentially cheaper if you do things in layers. If you try to squeeze everything on a base layer, you often have to sacrifice certain properties, and you don't want to do that with Bitcoin, because it's the whole value proposition of Bitcoin is that resilience and the decentralizations. And most aspect that people dislike about it, it's there for a reason. It's there to ensure that resilience on the base layer. So let me touch a bit on proof of work. So proof of work is the process, at least on Bitcoin's version of proof of work, is the process where network participants stake units of energy or electricity that they generate or they purchase at a market rate in order to include transactions into the blockchain, right? It sounds really a lot, but let me sort of make it a little bit understandable. So to understand proof of work, think of it as getting a PhD in something, right? There's a reason why you and I respect a PhD title when someone has something like that, because that effectively is a social proof that that person has physically put in years of study and hard work to achieve that PhD of something. essentially it's a proof of work, right? So Bitcoin's version of PhD is energy, right? And Satoshi picked energy because it's a universally recognized resource that takes effort to produce or purchase from a producer. So, and also it happens to be probably only one rare reference tool that is accountable and readable by both humans and computers. That's really important because in a natively decentralized network like Bitcoin, you want to reduce that injection of, source of truth from an external party, especially if there's a human input, there is always a point of corruption. And Bitcoin being a, natively, the data is natively already in there, reduces or eliminates that risk of, data corruption. And also using energy, it's designed system possible because it ensures that all market entrants, regardless all new players, say if you're a miner in early 2010, of your miner in 30 years down the line, both of you have to purchase or generate that unit of energy at a market rate, right? Being early in Bitcoin mining has no advantage to you because even if you pre-mine energy, it requires you to store it for later use. So this ensures that participants are always encouraged, new participants are always encouraged to come into it because the Bitcoin network really feeds off the security when there's more network participants. So, and also the reason why I think that the bigger energy use that Bitcoin actually get along is actually great. It's actually good for the network because it ensures greater settlement finality, right? Give you an example. Say if a dog was to bury the bone that it just found somewhere and really want to protect that bone from another dog that comes and sniff out of it, right? The more work that the dog had to do to bury that bone deeper, the greater the same equal amount of work or even more work from the other dog to dig that bone up, to take that bone away. So if you were to take that same logic and place into Bitcoin, now you really understand that why Bitcoin requires that amount of energy to be used. And it's actually a feature, not a bug, right? And if you compare it to the traditional banking system or gold mining or any sort of infrastructure out there, right? The energy use of Bitcoin, it's minuscule, right? There's so much energy being wasted and stranded in the world, and Bitcoin currently uses so small of a fraction of that. Essentially, it's a rounding error in something. So effectively, Bitcoin does two things. It replaces, it actually competes or replaces potentially a system that requires magnitudes more energy to sustain its growth, and obviously, everything else. If you think about it, like Mike Maloney, which is a very big goal bug in the space and very well-known personnel, he actually said that early on this week, he said Bitcoin uses a lot of energy. Yes, but it also doesn't need a military, right? What it means is that, right, most of the military in the world, right, it kind of secures that sovereignty, secures that strength of the currency in one way or the other. Bitcoin doesn't need that level of security because natively it's all done properly and well, right? And the second thing is that it actually incentivizes research and innovation into alternative and renewables. If you look at recently, there was a Bitcoin mining plant that was built on top of a spillage of gas. Essentially, that is a stranded energy that's too far away to be used for anything, and it's too expensive to store anyway because you got the batteries and everything. But essentially, you are taking the energy and building and strengthening a network that will be net benefit and net good for humanity. So I think that is actually something that people are missing. Something without actually judging the benefit that it brings. It's really really hard to actually grasp why that something costs certain value. I would say. So that's really my take on Bitcoin and energy.
That's a great explanation, Jeff. I think you've done really well there. It's obviously, or it can be perceived as a relatively complex topic to talk about, and I think you've condensed that really, really well. So hopefully the viewers get some value out of that. I'm sure they will. Look, moving on as well. Obviously, Elon also proposed the use of Dogecoin, or thinking that it's possibly a better use than, has a less energy cost than Bitcoin. What are your thoughts on what he said there about Dogecoin, and what are your thoughts on meme coins in general?
Yeah, I'll keep this one short because there's really not much to say here. I think most people on Twitter has defended this. So I just want to add, Dogecoin is great as a meme coin, which even its creator recently came out and kind of said that again, reiterate that it was really created as a joke, right? But in reality, right, Dogecoin is more susceptible to attacks and like, cyber attacks and 51% attacks, and it's simply a less secure copy of Bitcoin, right? In a blockchain system, there is no assurance that something is final. The only measurement is that how expensive it is to change the past. And Bitcoin, being the most network effect, being the one with the most hash power, is the most difficult to attack, right? That effectively gives it a coastline that protects the blockchain and protects the information in the blockchain from the past to the future. So having a less secure Bitcoin or faster Bitcoin, it's like thinning the walls of your castle to make more space inside. It's a very short-term focus aspect of it, because I want to touch on this point because it's very important. People don't understand that why people think that a faster, cheaper Bitcoin would win. And actually, it's not true, because really what is a blockchain? Blockchain is data. The more data you have, the harder it is to incentivize people to actually participate. So imagine syncing a 600 gigabyte blockchain versus a 60 terabyte blockchain, right? You obviously would have issues in terms of the latency, in terms of the hardware cost to keep up and everything. And over time, you lose that aspect for people to actually participate in the network. That is actually a very dangerous pathway to go down with, because remember, right, the network is only as strong as the participants that are securing the consensus of that protocol, right? That is originally why Bitcoin is designed to be secure over everything else on the base layer. And actually, that's a very important point, is that there are projects out there that leverages Bitcoin security to build something more scalable on top of it, right? For example, the Lightning Network is a payment layer on top of Bitcoin settlement layer. It leveraged the security of Bitcoin blockchain to provide, effectively millions of transactions per second capability on top of Bitcoin. That's already not an experiment. That is real. I've been using Lightning Network for years now. I've transacted, maybe even hundreds of thousands of dollars until today already on the Lightning Network. That's actually a very awesome and actually a real use case of that. And also, you look at recently that Microsoft was launched their Ion, which is the identity overlay network on top of Bitcoin. It's also using the same logic. It's leveraging the secureness of that base layer to create something scalable for whatever applications they are, right? You look at Rootstock, which is a smart contract layer on top of Bitcoin. And all these things really enforces the strength that how similar the scaling story of Bitcoin versus the internet, right? Big internet scaled in layers, Bitcoin will do the same.
Thank you. I appreciate you also giving some insight into your thoughts on Dogecoin and meme coins in general, and then obviously that explanation there. Hopefully the viewers take heed of that. I think, yeah, meme coins and stuff like that, obviously they're funny, they're created as a bit of a joke, but I'm glad you've sort of debunked the theory that they're ever going to overtake, Bitcoin. Where do you see all this going, Jeff, in terms of, Bitcoin, even Ethereum, and I guess the entire crypto space in general?
So like, obviously none of these are financial advice, but I think that Bitcoin and other crypto have a place to play definitely in the time moving forward, because it is essentially, there's two parts of the digital asset space. There's Bitcoin, which is really chasing after the digital asset aspect of things and really put on, contracts and programmability on another layer on top of it. And there are blockchains out there that prioritize that programmability and functionality on a base layer, right? It's two school of thoughts solving different problems, which are great, right? These are all, the more brains, the more talents into this space is actually net benefit for the whole space in general over time. So if you look at the digital asset aspect of it, right, it's actually being used by corporates around the world as an insurance against worldwide economic uncertainty and currency devaluation. In fact, it's not just corporations, it's individuals that are living in, disenfranchised economies and regimes that are effectively using Bitcoin as a lifeboat, right? Think of it, if you are a farmer in, say, Ethiopia, right? You are essentially locked out of the global economic sort of participation, not because that you aren't good enough, not because that you didn't study hard enough, right? It's just because the situation that you're placed in, right, effectively of no fault of your own, you are effectively locked at a space that you can't participate. But with Bitcoin, a person with a phone in a farm in Ethiopia and a person with a phone in a Stanford, dormitory in the US have equal economic right and financial inclusivity to participate in a global network that doesn't discriminate, doesn't exclude, and really is made for global and in the connectiveness of humanity on the internet age. So back to the point of Bitcoin is that it is maturing to be a global recognized store of value, from a niche digital experiment in the early days. If you look at the average CAGR of Bitcoin over the past 10 years, right, it's in the factors of 3 digits and above. Although past performance is not indicative of the future, you can actually see the potential of this asset class could have, right? And we are commonly seeing that even the CFA Institute Research Foundation found that 1% of portfolio invested in Bitcoin improve the portfolio performance, right? It actually reduces the volatility instead of adding more volatility in your portfolio, which is really counterintuitive what people perceive. So actually, I would say that the CIOs and CFOs and analysts of companies should actually plot this into a model and actually study this on a numbers basis. Remove that perception that this is something that it's a fad, it's something that is volatile, something that is pointless. Those days should be put aside and really look at this thing objectively and run the numbers and really see it for yourself and actually understand how can this play a part in your strategy. Because I mean, in the post-COVID world, we have actually seen how some of this global monetary and fiscal policies is evolving, right? The US itself has printed more than 40% of the US dollars in circulation, ever printed actually in circulation, or just in the past 12 months. That is an insane amount of injection into the economy, and I don't think that long-term wise that will play out well. So I think that having that small exposure to digital assets may be beneficial to consider.
Absolutely, Jeff. Look, it's been a pleasure. Do you have any closing thoughts or anything else you'd like to add for the viewers?
Sure. Thank you for your time. I'm really excited that we have now launched a regulated investment vehicle to the wholesale market in the form of Monochrome Bitcoin Fund, and finally be able to provide Australian institutions the opportunity to gain simple, regulated, and secure exposure to Bitcoin. So if anyone wants to learn anything more about Monochrome or the Monochrome Bitcoin Fund, you can visit the website at monochrome.co, as in CO. Thank you.
Awesome. Jeff, thanks so much for your time. Much appreciated.
No worries. See you. Thanks for having me.